So, just to take a leaf out of what Maheshwar just mentioned in the start, the last year, real turbulence was witnessed in the startup industry, especially on the funding front, right? Close to about 39%, the size of the deals have come down in terms of ticket size fundings. And the silver lining is also that 18% has been the increase in terms of number of deals. So one of the fear factor that many entrepreneurs expressed is, are we at an investment bubble, right? Are we going to get funded? Is there money in the system? So I wanted to start with that. Your quick thoughts on yeah, both of you. Yeah, sure.
Okay. Well, this just to give perspective. The total financial assets globally are $300 trillion. So when a worker works every day and then saves a little bit of money, he goes and puts it in a bank. And that, by the way, in India, as I mentioned just now, is significantly stressed because they gave it to assets. So most people are very conservative. Worldwide, $300 trillion are in financial assets. Forget about holding your home, holding gold, vintage cars, whichever other asset physically you may have. Out of $300 trillion, about $60 to $70 trillion is in equities. So almost 80%, nobody wants to take risk on. Out of that $60, $70 trillion, only $2.8 trillion is in private equity, which is not even listed, mature, large companies. So that's fallen to less than 1%. And out of $2.8 trillion, less than $300 billion is in venture capital for the SME, for the startup in the world that we live in. So the total money available is 0.1% of financial assets to people like us. Is that a bubble? Is it not a bubble? Are we taking enough risk? Are we innovating enough in the world? Are we taking risk at all? If we do not allocate, you and I do not allocate 0.1% of our time and capital to risk, to taking a daring journey, then it's unlikely that we will receive it if we are in that daring journey. So now visit a marine museum in Madrid, where the explorers from Portugal and Spain went around the world to look for the riches of the world. There were very few who took those ships. They're very tough. And we want disruption, we want innovation, because there's a switch happening. We have fear of things being shut down if we do not innovate and if we don't, move. So when you talk about bubble, these waves that happen, people take that 0.1% risk and even then step back and say, I'm not even taking 0.1. I'm going to drop that to 0.075%. So when I see that as a bubble, I see it as, okay, it's a small bubble in that little large ocean. And so it's a hard part. I just want to let everybody know, if you want to do anything daring, there are not very many people to support us.
So you say that the markets are tight.
So it's a bubble.
Yeah.
Actually, it is such a small drop.
Okay.
If you think about it, 0.01% with nothing.
Okay.
So as it is, to say that we create froth or the venture capital industry, that is people who want to do something new, are very few in the world.
Right.
Very, very few. So we do not have company. So there's no bubble there. Just want to sort of straighten the fact.
Sure.
Because nobody actually put money on us as an industry. So if I say I'm venture capital and you're the venture, both of us need money. Whose money? Your money. You put your money in a fixed deposit, that goes to that other stressed asset. If you put money into venture capital, it will come into this distressed asset.
Sure.
Yeah, so.
Absolutely. Yeah.
Thanks, Sudhir, for the right perspective. See, when you look at what's happening in the current, the media is always there. Tiger has invested in Flipkart and Snapdeal is closing, the Stagila is closing. See, all the monies, most of the monies have come from international things like within the $300 billion what Sudhir was talking about. But when you really look at the Indian scenario, there is a 10,000 crore startup fund which is announced by the government of India, which is going to be channelized through SIDBIs and other institutions of the world. 10,000 crore is available.
Yeah, the Corpus Fund.
There is another 10,000 crore which is available through the electronic data the people, which is again administered by CanBank and other people. Another 2,000 to 2,400 crore which is done by SIDBIs and other people. LIC is again going to put a top-up fund on the SIDBI of 2,000, it become another 200 crore. When you really total up the fund available in Indian system itself by the institution, it is more than 20-25,000 crores. Apart from that, there are enough and more HNIs who are funding the system more than 2,000 to 3,000 crores. Is it a bubble? Definitely not. Money is available. Money is going to be available for a sustainable business from going forward. If you try to get if you get into a valuation bubble, and if you try to get, okay, actually I have an idea, that idea is going to really make me another WhatsApp, I'm going to get a 19 billion, the answer is no. That money is not available from the system. If you really get an idea which has got a good, strong revenue model, which has at least get a path to profitability, that is what all the venture capital is gunning now. It is no more the ecosystem is going to fund my business, not my client is going to fund the business. Because this is what more and more deals are coming to us. It says it's a B2C model, sir. Where is the revenue model? Say, don't worry about the revenue model. The people who are going to who are going to come to my app is going to be so many millions of people, right? What is the app? This is what is the app. See, the real estate, what is happening, which is available in anybody's hand, is only that mobile phone. The app, what you are going to talk, it should come in the first screen. So the amount of money or amount of $1 million is going to get into the first screen is going to be humongous. Actually, it is not they say it's an asset-light model. It is not going to be asset-light model. So if you have a revenue which is going to be sustainable, people definitely will fund your business. If you say that the revenue is going to come after 10 years or the profits are not visible profits, then the money available is going to be tough.
Sure. And since, Vineet, you being an investor and an entrepreneur yourself, one of the questions is, how do one find an angel investor? You know, a lot of startups are around. How do one identify, and once they identify, how should they approach you? Should they take a list and then start emailing? What's the best way? What would be a tip that you would suggest?
Right, and I think right now, given the ecosystem, I think there are a lot of opportunities, a lot of platforms, a lot of forums that are available. So there are groups like Chennai Angels. You can just approach us, write to us, and we have a pretty streamlined process. So we look at each and every investment proposal that comes to us by the investors themselves in a committee member every Friday. Every Friday we do that, and then post that we have our investors have detailed conversation with the entrepreneur. Some entrepreneurs need some little more time. Some are ready for the round. So we invest time in speaking to the entrepreneur and understanding the business, understanding the team, and then we guide them. So we take it very seriously that so some of our members work with the entrepreneur for 3 months, 6 months to get them ready or fine-tune their business model, and then let them apply to Chennai Angels again. So we go the entire piece again. The whole objective of Chennai Angels was, while funding is one important part, but how to develop the entire ecosystem in Chennai, so to speak, and that's how. So you have Chennai Angels for Chennai people. I think that's a wonderful forum. You can approach us. You can approach us through the event owners as well. You can get the details of us, and they will help you connect. And then there are other forums as well, like Let's Venture, or our ventures. So these are other online platforms where you can also approach, and it's very accessible. Those platforms have developed in such a manner that it becomes seamless. You can figure it out which kind of investors have invested in similar kind of business that you have. And the information is all there. You can do a little bit research, you can find it on LinkedIn, you can find a news article who are investing in your kind of a sector, and you can reach out to them through some of these crowdfunding platforms, through regional forums, and through LinkedIn, right? I approached a couple of my investors through LinkedIn. So I think the information is all there. You just need to find the right investor that you want on board, what is the sector is interested in, because you want more than money. And that's what I believe. It's just not the fun. You need mentors. I need mentors, so that's what we look at.
So some homework is to be done in terms of what portfolio companies are being managed by the investors.
Absolutely. It's very, very important.
Okay, so that you don't do a one-size-fits-all approach to all, and then you target specific investors who would be interested in your portfolio. Okay, so another question I keep getting asked by entrepreneurs is that when is the best time to actually raise the money? If I raise it too early, I'm going to give out a lot of equity, right? If I raise it too late, then am I missing out on the opportunity that I could have actually scaled up much earlier? So what's the best time? What would you recommend?
See, like Vinit was telling, the guys who have got a good idea, maybe the right time to go to them is to the angels. Even the angels actually, they are not looking at only an idea. Actually, they are also started looking at a referenceable customer. Once angels have really put in some money, when we come to the venture capital, we are looking at one thing, which is the unit economics is there or not in the business. If you are able to demonstrate some kind of unit economics is profitable, because we don't want to again go on funding a company which has got a gross margin negative, because that never be corrected in future. That unit economics, after it is established with some good referenceable customer and a little bit of scaling visibility is there, that's the time you can approach venture capital.